Most traders are taught how to find entries, but very few are taught something far more important: when not to trade. In reality, a large percentage of losses don't come from bad strategies. They come from trading during periods when the market is telling you very clearly to wait. Today, I want to walk through how to define what's called a no-trade zone, using Bitcoin's current market structure as a real-time example. To do that, we'll use three tools together: demand zones, VWAP, and Camel's cycle low indicator. The goal is recognizing when patience is the highest probability decision. Let's start with demand zones, because this is where most newer traders get tripped up. A demand zone is not simply a place where price bounced in the past. A true demand zone forms when strong buyers step in and force price to move away aggressively. Typically, price will pause briefly, forming a small base, and then break higher with strong momentum, changing structure by breaking a previous resistance level. The most important thing to understand is this: demand is defined by the move away, not by the move into the zone. If price drifts upwards slowly or chops sideways, that is not demand. Demand only exists once the market proves that buyers took control. Looking at Bitcoin right now on the daily chart, the previous demand zone that existed before the breakdown is no longer valid. Price returned to that area, failed to hold, and then broke through it decisively. Once that happens, demand is invalidated. Until we see a new impulsive move up from a fresh low, there is no current demand zone on the daily time frame. A long setup does not yet exist. Next, let's talk about VWAP. VWAP stands for volume-weighted average price. In simple terms, it represents the average price where the majority transacted, weighted by volume. Think of VWAP as a way to define fair value. Above VWAP, buyers are in control. Below it, sellers are in control. When price moves back and forth around it, the market is in negotiation. One of the most common mistakes traders make is anchoring VWAP at random swing highs or lows. It should not be anchored arbitrarily. VWAP should be anchored at the candle that caused a regime change. In a bearish market, that means anchoring at the lower high that led to the sell-off. On Bitcoin's chart, VWAP is correctly anchored at the most recent lower high. That anchor represents the average price of traders who are now trapped. This brings us to the no-trade zone. A no-trade zone forms when price is stuck between opposing forces. Right now, Bitcoin is trading below VWAP, which tells us sellers have control. At the same time, it's approaching areas where a reaction could occur, but without demand. In this environment, shorting becomes risky because price is already extended. Longing becomes risky because there is no proof buyers have taken control. This is where risk to reward collapses and chop increases. Traders tend to overtrade out of boredom or FOMO. The market is saying, wait. This is where Camel's cycle low indicator adds context. Cycle indicators don't tell you where to enter, they tell you when the probability of a shift increases. Right now, Bitcoin is inside a daily cycle low window, but a cycle low has not yet been confirmed. That distinction is critical. A cycle window means aggressive shorts should back off and longs should stop trying to predict a bottom. It does not mean the bottom is in. When you combine all three tools, the message becomes clear. No confirmed demand. VWAP remains bearish. Cycle low unconfirmed. That is a no-trade zone. So when do we trade? A long only becomes valid after a cycle low is confirmed and a new demand zone is created and VWAP is reclaimed. A short setup only becomes valid after price rallies back into VWAP and fails while structure remains bearish. Until then, the correct action is to wait. Most traders think patience means missing opportunities. In reality, patience protects your capital so you're ready when the opportunity actually arrives. Right now, Bitcoin is not offering a high probability swing trade, and recognizing that is not weakness, it's an edge. Thanks for spending a few minutes with me. If this helped, feel free to leave a like and subscribe for more. I'll see you in the next one.